All right, welcome back, everyone. Today we're going to be taking a deep dive into UPL Limited. You guys sent over some really fascinating financial reports, their Q2 results for fiscal year 2025. And, well, there's a lot to dig into.
Yeah, definitely a lot to unpack.
So for anyone who might not know, UPL is a global player in agricultural solutions. We're talking fertilizers, pesticides, all that good stuff that helps farmers grow our food. And just at first glance, their revenue growth this quarter is pretty impressive, a 9% jump year on year, reaching, wait for it, 11,090 crore.
Wow, that's a big number.
Huge, right. But what's really driving this growth? Is it just because they're selling more products, or is there something else going on here?
Well, that's the key question, isn't it? And when you dig into the reports, it turns out a big chunk of this growth, like a whopping 16%, is actually coming from increased sales volume. So yeah, farmers are definitely buying more of UPL's products.
Okay, so demand is up. That makes sense.
Right. But here's the twist. The prices of these products actually went down by 7%.
Interesting. So even though they're selling more, they're actually making less on each sale.
Exactly. It's a classic case of pricing pressure. The market's getting more competitive, and that's forcing companies like UPL to lower their prices to stay competitive.
And that pricing pressure is probably why their EBITDA, which is essentially a measure of their profitability, is a bit lower than last year, right?
Yeah, but got it. The reports actually mention something called contribution margin, which basically means how much profit they're making on each unit they sell. And this margin has shrunk by 220 basis points.
Oof, that's gotta hurt.
Yeah, it definitely impacts their bottom line. And the main culprit, you guessed it, is that pricing pressure on their key products.
It's like when you see those buy one, get one free deals at the grocery store. The store might be selling more, but they're probably making less profit on each individual item.
Perfect analogy. Now, another thing that jumped out at me was their debt situation. You'd think with overall debt increasing since March 2024, their net debt would also be higher, right?
Yeah, that would be the logical assumption.
But get this, it's actually lower than last year.
How is that even possible?
Well, they've done a really impressive job managing their working capital, especially when it comes to inventory. They're basically turning over their inventory much faster, which means they're not tying up as much cash in unsold products.
That's some smart financial maneuvering.
Oh, absolutely. And it's a good sign that they're focused on efficiency and keeping that cash flow moving.
Okay, so they're being financially savvy. That's good to know. Now, let's talk about one of the key players in UPL's growth story, UPL Corporation. It seems like they're really on a mission to grab more market share globally.
Yeah, UPL Corporation is definitely a key engine for their growth. And just like the overall group, their growth is largely volume-driven. But as we've already seen, they're also facing those same pricing headwinds in a lot of their markets.
Yeah, the report highlighted some specific examples, like they're selling a lot more fungicides in Brazil and Europe, which is great, but herbicide sales have taken a hit in Argentina and North America, and those insecticide prices in Brazil, not looking so good either.
It's a mixed bag for sure. But there are some bright spots. Their natural plant protection segment, or MPP, is doing exceptionally well, particularly in Latin America and Europe. This segment focuses on biocontrol products, so things like beneficial insects or microbial solutions, basically things that help control pests without relying on harsh chemicals.
So they're tapping into that growing demand for more sustainable and eco-friendly solutions. Looks like that strategy is paying off, at least in some markets. But what about that mention of ECL and bad debts hitting Latin America? What was that all about?
Right, so ECL stands for expected credit loss. It's basically an estimate of how much money they might lose because some customers might not pay their bills. And unfortunately, Latin America has been hit with both bad debts and higher ECL, which means their expenses in that region have gone up.
Okay, so that's eating into their profit.
Exactly. These expenses fall under what's called SG&A selling, general, and administrative expenses. It's basically all the costs associated with running the business, like salaries, marketing, office rent, that kind of thing.
Gotcha. So those higher ECL and bad debts in Latin America have actually dragged down UPL Corporation's profits a bit. Okay, so it's not all sunshine and roses for UPL Corporation. But let's switch gears now and talk about something that really caught my eye. UPL's performance in their home market, India. Their standalone business there, UPL SaaS, is absolutely killing it.
They're on fire. A 20% revenue jump in just one quarter? That's incredible.
Right. It looks like a combination of higher sales volumes and more of that smart working capital management we were talking about earlier.
Exactly. They're firing on all cylinders.
But what really blew me away was their EBITDA margin jump from a measly 3.5% last year to a whopping 20% this year.
That's a massive improvement. How did they manage that?
Yeah, what's the secret sauce?
Well, a few things seem to be at play here. First, they've launched some new products that are clearly resonating with the Indian market. Second, their existing brands are performing incredibly well. And finally, they've clearly implemented some effective cost-cutting measures.
So it's a triple whammy of success. New products, strong brands, and cost control. That's a winning formula. Now, speaking of new and exciting things, let's talk about this nurture business that keeps popping up in the reports. It's not every day you see an agricultural company making a move into retail, selling directly to consumers.
Yeah, that's definitely not your typical ag play. Now, just to be clear, Nurture operates as a separate unit under UPL SAS, and its financial results are reported independently.
Okay, so it's kind of like a little startup within a giant corporation.
Exactly. They're keeping things separate.
But what exactly is Nurture doing that's so different?
Well, from what I gather, their platform, Nurture.Retail, is all about connecting directly with farmers and offering them a one-stop shop for all their agricultural needs. Think seeds, fertilizers, pesticides, even advice and information, all accessible through their app or website.
So it's kind of like an Amazon for farmers.
Exactly. It's a pretty innovative approach.
And are they actually seeing any success with this?
It's still early days, but the signs are promising. They've reported double-digit growth in both engagement time and active users compared to last year.
Wow, so farmers are actually using it.
It seems like they're finding real value in the platform.
It'll be fascinating to see how this evolves. Could this be a game changer for UPL? Could it even become a major revenue driver down the line?
Those are great questions. Definitely something to keep an eye on.
Okay, so Nurture, definitely one to watch. Now, before we wrap up this part of our deep dive, let's touch on two other pieces of the UPL puzzle: Advanta Seeds and their specialty chemicals business.
All right, what do we have there?
So Advanta is UPL's seed business, and they saw a decent 4% revenue increase this quarter, mainly driven by sales of grain, sorghum, and corn.
Not bad, not bad.
But here's the interesting part. Even though their input costs have gone up, things like the cost of raw materials, they've actually managed to improve their contribution margin. That tells me they're running a tight ship over there, focused on efficiency.
Definitely. They're squeezing every bit of profit they can out of each sale.
Impressive. And what about specialty chemicals? What's their story?
Their story is a bit more complex. So overall, their revenue has remained flat, but there's a lot happening beneath the surface. They have two main segments: captive, which means they mainly supply products within UPL, and non-captive, where they sell to external customers.
Okay, so two different sides to the business.
Right. Their captive segment saw a slight dip in revenue due to changes in their product mix. But their non-captive segment had a remarkable 26% surge in revenue.
Whoa, 26%. That's huge. What's driving that growth?
It seems like they're strategically focusing on some high-margin niches within the specialty chemicals market, things like lubricants and flame retardants. These are products that command a premium price and have strong demand.
So they're diversifying their portfolio and going after those higher profit opportunities.
Smart move.
Yeah.
Especially when you consider the pricing pressures they're facing in their core business.
Right. It's like they're building a second engine for their growth, one that's less reliant on volume and more focused on value.
That's a great way to put it.
So it's clear that UPL isn't just sticking to the old playbook. They're actively exploring new avenues for growth and adapting to the changing market dynamics.
Absolutely. They're not afraid to shake things up and try new things.
Well, it's definitely been a fascinating deep dive into UPL Ltd's Q2 FY25 results so far. We've covered a lot of ground, from their impressive volume growth to their strategic financial moves and their ventures into new areas like retail and specialty chemicals.
And we've only just scratched the surface.
There's still so much more to uncover, especially when it comes to their overall outlook for the rest of the fiscal year, and grappling with some key questions about their future, like, will this volume-driven growth strategy really be sustainable in the long run? And what role will those new ventures like Nurture play in their overall success?
Big questions. We'll have to dive into those next time.
Absolutely. We'll tackle all that and more, so make sure you join us for part 2 of our deep dive into UPL Ltd. It's going to be a wild ride.
You know, going through all these numbers, it really struck me that UPL is walking this tightrope right now.
Yeah. It's a tough balancing act for sure.
On one hand, incredible surge in sales volume, But then on the other, you got those pricing pressures squeezing their profit
It's
margins.
like they're running a marathon, but uphill.
I like that. Putting in all this effort to increase sales, but the terrain is working against them.
Makes you appreciate those strategic initiatives even more, right? Their focus on debt management, the push into sustainable solutions with NPP.
Absolutely. Those efforts are definitely helping them stay profitable. But it also raises the question, how sustainable is this volume-driven growth in the long run?
Right. At what point do they need to shift gears? Maybe focus more on products or services with higher prices.
It's a classic dilemma, isn't it? Keep chasing market share, even with lower profits. Or do you try to create something unique, specialized, and lets you charge a premium?
And that's where nurture gets even more interesting. It's like they're testing a whole different business model,
Oh.
one that bypasses the traditional agricultural supply chain, connects directly with farmers. Exactly. Straight to the consumer. Potentially tapping into a new revenue stream, one that's, well, less vulnerable to those price fluctuations we talked about.
Definitely a gold move.
Yeah.
We'll have to see how that plays out.
Totally agree. And let's not forget their specialty chemicals business either, doubling down on high-margin products, lubricants, flame retardants.
Smart move, diversifying their income, boosting profitability.
Shows they're not just sticking to the old ways,
Right.
right? Actively exploring new avenues, adapting to those changing market dynamics.
And as we saw with their impressive working capital management, they're not afraid to get creative on the financial side. That lower net debt, despite the overall increase, really speaks to their planning.
Couldn't have said it better myself. They're not just about top-line growth, that's clear. It's financial stability, operational efficiency too.
Okay, so we've unpacked a lot about their performance this quarter, but before we wrap up, I'd love to leave our listeners with a question, something to think about.
I like that. Little food for thought. So, given the impact of these pricing pressures, right? How sustainable is a volume-driven growth strategy for UPL in the long term?
That's the question, isn't it? Gets to the heart of it all.
Will they need to make adjustments? Focus even more on higher margin products, services like nurture.
Or could those easing input costs they're anticipating be enough? Allow them to stay the course?
Well,
Tough to say.
yeah, we don't have a crystal ball, unfortunately, but hopefully our deep dive has given everyone some insight, some context, to form your own opinions about UPL's future.
Well said. It's been a pleasure dissecting these reports with you.
Likewise. And to all our listeners out there, thanks for joining us. We encourage you to keep learning, keep questioning, and keep a close eye on UPL. Now, UPL's given us a lot to think about, but let's shift gears a bit and talk about their outlook for the rest of the year. The investor presentation mentions strong farm gate demand, but also warns about potential headwinds from lower farm gate pricing.
Right. Now, for those of us who aren't, fluent in Ag Econ 101, what exactly does farm gate mean?
Yeah, good point. Let's break that down.
Essentially, farm gate refers to the prices that farmers receive for their crops. So strong farm gate demand, that means farmers are buying more inputs, fertilizers, pesticides, all the stuff that UPL sells, which is good news for them. But lower farm gate pricing, well, that means farmers are getting less money for their harvests.
So they might not be able to buy as much next season?
Exactly. It could impact their ability to buy those inputs in the future.
Ah, I see. It's a double-edged sword, right? Higher demand now, but potential risks down the line.
Precisely. But there is a potential silver lining. The report suggests that input costs for some of UPL's key products are actually expected to go down in the second half of fiscal year 2025.
Oh, okay, so that could help their margins.
Right, could offset some of that pricing pressure they've been facing.
Fingers crossed for that margin boost. So it seems like UPL's navigating a pretty complex landscape right now. Strong demand, but pricing pressures. New ventures showing promise, but still unproven. And then there's the whole macroeconomic picture, with global food security becoming more and more of a concern.
Exactly, and this is where things get really interesting. Because UPL isn't just any company. They're a major player in a sector that's, well, directly tied to feeding the world.
Yeah, their products are essential.
As the global population continues to grow, that demand for agricultural solutions is only going to intensify.
So the stakes are pretty high.
Puts UPL in a unique position. Their decisions, their actions, they have far-reaching consequences. It's not just about selling products anymore. It's about ensuring a stable and sustainable food supply for billions of people.
That's a pretty heavy responsibility.
It is. It adds a whole new dimension to our analysis of their financial performance.
Right. We're talking profitability, growth. But ultimately, UPL's success is tied to the well-being of farmers and consumers around the world.
It's a good reminder that business isn't just about the numbers, right? It's about people and the impact we have on their lives.
Well said. Now, before we get too philosophical here, let's bring it back to UPL and those interesting developments in their specialty chemicals business. Remember that impressive 26% revenue growth in their non-captive segment?
Oh yeah, that was a standout figure for
Yeah.
sure. What's particularly interesting is their focus on those high merchant niches, lubricants, flame retardants, suggests they're being very selective, targeting areas where they can command a premium price.
It's a smart move, especially given those pricing pressures we talked about.
Absolutely. Like they're building a second engine for growth. Less reliant on volume, more focused on value.
And it's not just about finding new products or markets either. They're optimizing their existing operations too. We talked about working capital, but there's also R&D, supply chain efficiency.
Pulling out all the stops, like they're running a marathon,
Yeah.
but constantly fine-tuning their stride.
Another great analogy. Highlights the importance of adapting, improving.
Couldn't agree more. So wrapping up this part of our deep dive, I'm left with a sense of, I don't know, cautious optimism about UPL's future.
Yeah, I get that. They're facing challenges, definitely. But they're also showing that willingness to adapt, innovate, invest.
It's a good reminder that even when things are tough, there's always room to maneuver, to be creative.
And who knows, maybe nurture really will be that game changer.
Only time will tell. UPL is definitely a company worth watching.
All right, so in this second part, we've explored their outlook for the rest of the year. We delved into farm-gate economics, even touched on, the implications for global food security.
We've covered a lot of ground.
But there's one more aspect of UPL's business that we haven't explored yet, and that's their commitment to sustainability.
Ah, yes, sustainability. A hot topic these days for pretty much every industry.
And for UPL, it's not just talk. They've made some serious investments in developing sustainable agricultural practices.
Right, they've set some pretty ambitious targets too. Reducing their environmental footprint, promoting social responsibility throughout their supply chain.
And this is where things get really interesting, right? Because sustainability isn't just about doing the right thing. It can also be a really smart business strategy.
Absolutely. Consumers are more aware than ever about the impact of what they buy. They're willing to pay a premium for brands that align with their values.
So by embracing sustainability, UPL isn't just mitigating risk or boosting their reputation. It's creating new opportunities for growth, for differentiation.
It's like they're baking sustainability into the DNA of their business model.
Exactly. And it's not just about, eco-friendly products. It's about transforming their entire operation, from sourcing and production to distribution and marketing.
They're looking at everything through that sustainability lens, which is a significant shift.
And it's a shift that's being driven by a lot of factors, right? Consumer demand, investor pressure, regulations, you name it.
Yeah, it's like this perfect storm pushing businesses towards a more sustainable future.
And UPL seems to be right there in the middle of it.
They're not just reacting either. They're actively shaping their strategy to capitalize on the opportunities that sustainability presents.
It's a smart move, and it's one that's likely to pay off in the long run. Now, I'm curious to see how they're actually measuring and reporting their progress on these initiatives.
That's a great point. Transparency and accountability are absolutely crucial here.
Right. Especially with investors scrutinizing those ESG factors.
Yeah.
Environmental, social, and governance. You got to be able to walk the walk.
Exactly. They need to show the data, prove they're making a real difference.
Fortunately, there's this growing movement towards standardized sustainability reporting frameworks.
Which is a good thing. It'll make it much easier for companies like UPL to communicate their progress.
Right. Clear, consistent, everyone's on the same page.
It'll allow investors and consumers to compare companies and make informed decisions.
So, as we delve deeper into UPL's sustainability journey, we'll be watching closely. We'll be looking for that evidence of their commitment, transparency, accountability, continuous improvement.
And asking those tough questions about how these initiatives are actually translating into tangible results.
Because ultimately, sustainability is not just about doing good. It's about doing well by doing good.
And that's the sweet spot that UPL is aiming for.
Okay, so we've explored UPL's financial performance, their strategic initiatives, new ventures, and now their commitment to sustainability. It's been a pretty comprehensive deep dive, wouldn't you say?
Absolutely. We've covered a ton of ground.
But before we wrap up, I want to circle back to something we touched on earlier. The fact that UPL operates in a sector that's that's directly linked to global food security.
Right. Can't forget about that.
This is a crucial point to remember, because as the world's population keeps growing and climate change intensifies, the pressure on our food systems, it's only going to increase.
And companies like UPL are going to be right at the forefront of that.
They're going to need to innovate, develop new technologies, adopt sustainable practices, all to ensure that we can feed a growing population without depleting our resources.
It's a huge challenge.
Yeah.
But it's an incredibly important one.
And one that UPL seems to be taking seriously. Now, before we get carried away here, I want to leave our listeners with one final thought-provoking question to ponder.
All right, lay it on me.
Given UPL's position at the intersection of agriculture, technology, and sustainability, what role do you think they should play in shaping the future of food?
Wow, that's a big one. Really makes you think beyond just the numbers, the broader impact of UPL's work.
No easy answers, but it's a question worth asking.
Absolutely. The choices that UPL makes today will have a ripple effect for generations to come.
So on that note, I think it's time to wrap up the second part of our deep dive.
It's been a truly insightful conversation.
We've covered a lot of ground, and I'm sure everyone listening has plenty to think about. But before we sign off, I want to emphasize one key takeaway. UPL is a company in motion.
Always moving, always evolving.
They're constantly adapting, pushing the boundaries in the agricultural sector.
And their journey is a reflection of the broader transformation happening in the world today.
Driven by technology, sustainability, and a growing awareness of how interconnected everything is.
So let's keep our eyes on UPL and see where they go from here.
Absolutely. And let's keep asking those tough questions about the role businesses should play in creating a more sustainable future for all of us.
We really have gone deep on UPL, huh? Financials, sustainability. I mean, it's obvious they're not just sitting around.
Yeah, definitely a company in motion.
Yeah.
What strikes me is how willing they are to experiment, explore those new growth avenues.
Like that nurture.retail platform?
Yeah.
Right. Bold move, going straight to consumers, bypassing all those traditional channels.
Shows they're not afraid to shake things up a bit. Try something different. See if that gamble pays off.
It's like they're planting a new seed, hoping it grows into this massive tree. But even if it doesn't, you got to admire that willingness to try.
It's that entrepreneurial spirit that keeps them ahead of the game. Now, thinking about UPL's role, in the global food system, it almost reminds me of, it's like they're a master chef.
Ooh, I like this analogy. Go on.
They're trying to cook up this delicious, sustainable meal.
For a very hungry and growing family.
Exactly. They've got all these ingredients to work with, right? Fertilizers, pesticides, seeds, new technologies, even consumer preferences. And they're constantly experimenting new recipes, techniques, trying to create something that's both nourishing and appealing.
But also mindful of the limitations, right? Availability of resources, environmental impact, those changing tastes you mentioned.
Exactly. It's a complex task, no doubt.
Right.
But one that UPL seems to be approaching with creativity and a sense of purpose.
Speaking of purpose, we've talked a lot about, the numbers, the strategies, but it's important to remember, behind all that, there are real people.
Yeah, the human element.
Farmers, depending on their products, consumers needing that food, entire communities whose livelihoods are tied to agriculture.
It's a good reminder that business isn't just about, profits at the end of the day.
It's about making a positive impact, making a difference in people's lives.
And that's where UPL's commitment to sustainability really comes in. It's not just about, reducing their footprint. It's about creating a more equitable food system for everyone.
Empowering farmers, supporting communities, ensuring future generations have access to safe, nutritious food.
A powerful mission, and one that I think is worth supporting.
Definitely. Now, I know we've covered a lot today.
A lot of information to digest.
But hopefully this deep dive into UPL has been, informative, engaging.
We explored their performance, their strategies, new ventures, that commitment to sustainability.
Challenged you to think critically about the role businesses play, right? Shaping the future of food.
And most importantly, I hope we've sparked your curiosity, inspired you to learn more about this company, the challenges they face, the opportunities ahead.
So to everyone listening, thank you for joining us on this deep dive into UPL Ltd.
Keep exploring, keep asking those tough questions.
Because in a world that's constantly changing, that quest for knowledge, that's what keeps us moving forward.
Couldn't have said it better myself. Thanks for tuning in, everyone, and we'll catch you next time.